3-year consolidation with the inverted head and shoulders pointing to if these are just drawn very quickly, but it should point to roughly 2,650. You can see I have a bit more there, but if you align it better, I think that's where you're getting. So that is the short-term target. We can overshoot because when you reach such a big level or a big target, there will always be some overshooting. But that is the main takeaway for now, at least from this pattern alone, is that 2,700 roughly is probably where we will hit, and then we will see what happens.
Welcome back to Capital Cosm, guys. Today we've got Casper from Uselink to take us through some gold charts, the markets. We're going to see where all of these signs are pointing towards. Casper, thank you so much for coming on, my friend.
Thank you, Danny. I think it's my second time. I was on your YouTube channel, I think, at the early stage of your career.
Yeah. Actually, I think this is the third time. So
maybe.
You're doing a hat trick right now. So
yeah, exactly. But I'm glad to be on just to talk. I think we are going to talk a lot about gold today.
Yep,
it is
gold,
definitely
silver,
doing. Yeah,
the economy. We'll get your take on where you see the market's heading. Lots of stuff happening, so lots of stuff to dig into. But before we get started, I'd like to remind you guys to hit that like button if you're enjoying these videos, and to subscribe to the channel if you haven't already. That subscription goes a long way, and I'd really appreciate it. It takes less than a second to do, and it's free. So if you don't mind hitting that subscriber button on the side, I'd really appreciate it. Okay, Uselink, Casper, I'll let you take it away. What is kind of like your overview of the markets at the moment, like your very high level view of the markets?
I think ever since the March, I think precious metals, especially gold at that point in time, really took over. Gold were in a 3-year consolidation, you can say, ever since we peaked in 2020. And I think that is the start of at least the metals market doing really well. Gold usually leads, and then you have the other smaller metals like silver that followed up, a few months later. You have platinum that is trying to join the party. I think platinum needs to get above roughly 1,100 to really get going. And then you have palladium trying to bottom out. You have copper doing also somewhat well. So I think overall we are in for a resumption of the overall commodity bull market that, in my opinion, started or ignited with the March 2020 events, you can say. So yeah, gold, silver looks really, really good. I do think, however, we might be a tad extended on the gold chart on the short term. But again, if you're looking at the weekly and the monthly time frames, the chart is overall as good as it gets, really. And this 3-year to 4-year consolidation pattern actually points to $2,650, but we can have a look at that on the charts later on. So that is the short-term target for me for gold. So yeah, overall commodities is still the place to be, really, even though it's a difficult sector to invest into. I think you know that as well. It's very volatile, to say the least. So yeah.
Fantastic. Well, let's just dive right in, Casper. Let's go ahead and dig into gold. What are you seeing in terms of the gold chart right now? Feel free to share your screen.
Sure, I will share my screen. And let me know if you can if you can see the chart, really.
Yep, I can see it.
Cool. I think we will stay here on the weekly time frame. I have cleared up most of the chart here because I had a lot of short-term trend lines on, but I think for this interview, maybe that will make the chart a bit messy for your viewers. But basically what I just described here with the gold is that if I can find my drawing pen, we peaked there in 2020, August, and ever since we actually had a 3-year sideways consolidation. And within that period, as I know, I think some of your guests also have pointed out, is that we made this major inverted head and shoulders. And the beauty of this chart is actually, yes, we have the inverted head and shoulders, but also we had the touch there, and then we had this beautiful little bullish consolidation before we went full-on breakout mode there. And as mentioned, that was in March 2024. Also, we had these three little tops here break 2000 and roughly 80 was the level there. And ever since we cleared that, it has basically roughly been a one-way street. Yes, for the past, few months here, we have gone basically sideways. But again, I think overall the direction is up, and we are to see a lot higher gold prices in the future. I think also overall in the world today, a lot of things is going on here. But I think the overall takeaway from gold is that when gold goes up, that means that your purchasing power in your currency, in this case the dollar, is going down. That is what gold is tracking mostly. So that is also why this chart is a bit scary,
Right.
because gold going up means that the dollars that you have in your bank in a few years' time will buy a lot less than it did, uh, from today, really. So
So
um,
what does that yellow bar there indicate? You've got the yellow bar tipping up at around 2,700. What does that mean?
yeah, that's the pattern that we briefly here discussed,
Hmm.
the 3-year consolidation with the inverted head and shoulders pointing to if these are just drawn very quickly, but it should point to roughly 2,650. You can see I have a bit more there, but if you align it better, I think that's where you're getting. So that is the short-term target. We can overshoot because when you reach such a big level or a big target, there will always be some overshooting. But that is the main takeaway for now, at least from this pattern alone, is that 2,700 roughly is probably where we will hit, and then we will see what happens. But again, that's not to say 5 years down the road, I think we will be a lot higher. But that is the short-term target here for gold.
Short term in terms of a few months from now, a year from now.
Yeah, 2024 basically. I think we will hit
Okay.
it in 2024. It could be in a month, it could be in December, but timing wise, that's always a bit difficult. But again,
Right.
that is yeah, within that range. 2024, I think we will at least hit this target here, and from there we will see where we are going.
Okay. And how are you seeing the miners play out into all of this compared to
Sure.
the gold price?
Yeah, yeah. We can first take if I can find the correct bar here. For instance, I think right now the this is the GDXJ. So that is the junior gold miners. We don't have a lot of data. We only have 15 years. It sounds like a lot, but actually in the grand scheme of things, it's actually not that much. Um, and also here, back in March, where gold started to break out, you actually had the junior miners also breaking out of this 4-year, 3-year triangle that was created. And the beauty of this one is that it is very, very well defined. You can basically see
Yep.
that every wick here is just dead on to the triangle, and we broke, and we have actually ever since been in a stage 2 uptrend on the weekly. So the gold miners is definitely, in my opinion, just beginning here, just beginning. And if we zoom out, it doesn't go back to more than 15 years, but again, you can still see here in US dollar terms that gold miners, in this case the juniors, are very, very cheap still, and I think they have a lot of catching up to do to gold, because over here gold were 1900, and right now here gold is, as we just talked about, 2400. So that there is a huge divergence between the miners and gold.
Do you think that the GDXJ, the Junior Gold Miners Index, will actually do any catching up to gold, given that the vast majority of these names in that index are are suboptimal? Let's just put it that way.
I think they will catch up. Will they close the entire gap? Who knows? But I think at the end of this gold bull market, you usually have the smaller names that, as you also mentioned, maybe doesn't have that much fundamentals to it. You get the mania, just like you see in every other sector. You see the smaller cap stocks do really, really well. So I'm actually a bit surprised to see juniors already doing really well because you usually see that later on in the game. Um, but yeah, I guess the divergence is because the gold price, we're only roughly, what is it, 15% above the 2011 high, but the inflation with regarding to manpower, wages and oil and all that good stuff, everything has just shot up in price, especially for the past 4 years. So to have a mine to hire people and to your equipment and all that has just been a lot more expensive. Therefore, your cost is going up, while gold is only, in quotes, up 15%. I am pretty sure that the cost overall has increased a lot more than 15% in the past 10, 15 years. So that is why you have this pressure on gold miners. But I think what we have seen in the past few months here is actually a really good sign for the gold miners. And you have to remember the mining sector is extremely small. So when you have money trying to pile into a small sector, you can get these big spikes. But that also means you have to see the other side of the coin is that when this money tries to leave again, it also creates big pullbacks. So it is two sides to each story.
So
Um,
what?
yeah,
Yeah. So while gold has been making new all-time highs as of recently, silver is still down roughly 40% of its all-time highs. Take us through silver. What are you seeing there? Oh, actually, you've got the GDXJ versus the gold ratio pulled up. Take
yeah,
take us through that first, and then pivot over to silver.
sure. Yeah, just to show you the huge divergence, I think this chart shows it really well. There's also Tavi Costa on Twitter that has been showing this chart here a lot lately. He's also a really, in my opinion, and a really clever guy when it comes to mining and to commodities. So, but he's also showing here that actually you have the gold juniors in this month here, if we can close where we are or higher, that the gold miners is breaking out against gold, and that is exactly where you want to be when you have your stocks outperforming their underlying metals, in this case, gold. So it could be the start of something big here for the gold miners.
Okay.
So so yeah,
So you can see on that chart, however, we've hit that line many times over the last 4 years. Now, you could have
exactly.
made that same case in 20, I don't know, 2021, 2022. It's now 2024. It kind of begs the question, are you you know, you're either going to take a dump or you're going to get off the pot. So like for the gold miners prize, like, well, how do we know when it's finally game time here? Are you in the market for gold and silver? Then, if so, please consider Miles Franklin. They are my gold and silver dealer of choice. So, not only do they have super competitive prices that you're going to have a really hard time finding elsewhere, but then they also have top notch customer support. I know Andy Schechtman, the owner of Miles Franklin, top notch guy. I wouldn't be recommending them to you if I didn't have faith in their product mode. What you really want to do, however, you want to email them at info@milesfranklin.com, and you want to say that Capital Cosm sent me in the description line, because when you do that, you can get access to their special pricing sheet. You want to get that special pricing sheet because you're going to get special prices that you won't find on the website itself. So email them at info@milesfranklin.com. Tell them that Capital Cosm sent you, and you won't be heckled with spam emails, etc. There's no commitment necessary. I promise you that. And with that said, I will let you get back to the video.
I think we have to wait to see how the month is ending, because you can see here, everything before that has just been wicks into it.
Mm,
And right now we had, 3 months ago we had an attempt, we pulled back again. So you can see here we're actually having the best time in a long time where you have a full monthly body actually trying to break out. But again, we have, I think, 12 trading days still. A lot can
right,
happen, and it can easily be, over, in 12 days, and we are closing below. But for
right.
now, at least, it looks good. But that can change very rapidly. Just look at today, right? Everything is basically deeply in the red. So yeah, it's
Yeah.
wait for the monthly candle. I guess that's the big takeaway.
All right. Well, what about silver? What's your prognosis on silver?
Silver is also looking really, really good. The fun or the difficult thing with the silver is that it is very, very, very volatile, and it does, if gold moves, I mean, silver will do that 3x in both directions. So it's very difficult to really understand what silver is doing, but it is my take. I want to zoom out here just a bit. Let's remove some of the lines here just to make it a bit more visual for you guys. I think the way I see it is that ever since we broke this trend line or this rail coming down, and we can zoom in here just so you can get a little bit of a more clear view. So this is a trend line going back to 2011. So we're talking roughly 13, 14 years. Ever since we broke 26, in my opinion, or the way I see the chart is that that was when silver finally broke out. We broke out from 26, rallied heavily into the big 30, which was a big top here back
Yep.
in 2020. Pulled back to 26 once again, rallied, and now we're retesting 30. So from a technical point of view, it's doing exactly what you expect it to do, to break out, to retest the prior major level. You break out from the next top there you have made, and then you're retesting 30, and now we should be coming up higher again. And yeah, also, so silver I think looks also really good, and you have the over. I think you have seen this. You have seen this many times on your show that I think I think the bull market started at $26, but I think we are on the route to hit 50 at some point in time. I think this is the biggest cup and handle you have ever seen. Basically, this goes
Hmm.
back half a decade. But again, it takes time to play out. So don't expect it to happen, tomorrow or within a week. But I think we are on the path to hit 50, and then, in my opinion, we will have a big pullback. How how low it will be, I don't know. Maybe 40, maybe 35. I don't know. But the pullback once we hit 50 will be violent. You have to remember there's a lot of people that bought the FOMO, the end spike there, from 30 to 50. So there's a lot of people waiting to selling their silver, and they can finally get rid of it, in quotes, after 15 years. Um, but yeah, I think all the hard work is also done here for silver. And you have the same thing again. You have the same kind of pattern here with that inverted head and shoulders hidden in the consolidation, and it points to we can do the exact same measured move here. We can roughly lay it on top there. So this one is pointing to roughly 38 for this pattern alone. Uh, so that is the first next big target. Again, we can overshoot. Um, but then we also have this, if you measure from the low of March 2020 to the peak there just a few months later at 30, and you can add that on top, and you can see we're actually getting, depending on how you measure it, we are getting kind of close to that $50 level. Again, with some overperformance, you will get that at some point in time here for silver.
I
Again,
see.
timing, yeah.
Any no, go ahead and finish your thought. I'll ask my question after.
Yeah, again, timing wise, it's very difficult, especially for silver, because it does what it. I think it will do that when you least expect it. And also, if we go back to the weekly here, you can see when we can actually go further back, because when silver breaks out, you can see you have these. This is back in '05.
Hmm.
When it breaks, silver runs. I mean, there's no stopping. Same thing here again in 2008, no stopping. And then in 11, so you can just see whenever we get these big breakouts, it just keeps running for a very, very short period of time, but with a very steep angle, and then you start to correct heavily. And I think this is the same thing again here. We have broken out heavily here, and we should fairly quickly reach, roughly anywhere between 40 and 50, depending on how much overperformance we get at that point.
Yeah. What about the gold to silver ratio? I'm a big fan of ratios because it
Yeah,
not
yeah.
only prices an asset, relative to another asset, but you're pricing something that's not a moving target like the dollar or any
Mhm.
currency for that matter. So what is the gold and silver ratio telling us?
I agree. Ratios, I use ratios a lot also to see as an overall guide. It could be within uranium, it could be within, in this case, gold to silver. And if we, I want to zoom in here just a bit, and then we can zoom out because I think there are some really cool alignments if we look back 50 years. And that's also why I think gold and silver will be one of the biggest um, investment opportunities that you can have. With that in mind, that it will also be one of the most difficult ones to ride fully. But what we see here is if we go to the weekly chart, for want to align it perfectly here so we get it all in here.
Wow,
Um,
that's a thing of beauty right there.
yeah, it is. It's what happened there in May, at the end of May here. So that's only 2 months ago, roughly. You actually, I want to remove the green one here just to get a bit more visual. You can see here we started to break down heavily of a 3 to 4 year um, pullback, you can say, or consolidation. You had the big spike there in March 2020, and then you had silver rallying, and this was your wave two, and we finally broke down from two major trend lines. One of them actually went all the way back to the peak there in 2011. We had the connection here and there, and we also broke here. So this tells me that the gold to silver bull market is in full swing, and that actually silver will finally do some outperformance here in the next half year. Again, timing wise can be difficult, but silver is definitely in the driving seat. Um, but also here in the short term, you can see we started to break here. We saw this big move down, and now we're coming in for the big retest basically into these two trend lines, and we should start to roll over, and that's when silver is outperforming. So you have to see it as inverted. So whenever this ratio goes down, that is when silver outperforms gold, and that is more or less always when both of them go up. So you have gold going up, but you have silver doing that a lot faster than gold.
Gotcha. And just generally speaking, like economic indicators elsewhere, what are you seeing in terms of the DXY dollar strength? Obviously, because the dollar strength pertains to, has some relation to the gold price, especially the price of gold in USDs. So what are you seeing out there in terms of the dollar strength? What are you seeing out there in terms of some of these macro signals you've got?
I can go to that, but can I show you one? I think it's just a fantastic alignment, and
Sure.
in this ratio, and then we can go into, because I think what you're saying about the dollar is, yes, you want the dollar to go down, but you actually want to measure gold in relation to inflation. That is, in my opinion, the best way to do it. But I want to show you here and your viewers an alignment. I think it's dead on. And when you have these alignments that are just perfect, I think they have a lot of merit to it. So basically what I've done here is you take a Fibonacci extension from the peak there in March 2020 to the lows in 2021, and then you take the next high there, and then you get your Fibonacci extensions levels. And just very briefly here, you have just your 1.618, just perfect alignment there with the low in
Mm,
2011. The next big Fib level is the low there in
wow.
all the way back in the 80s. And then you have what Keith Neumeyer, I don't know if you have talked to him, I can't remember, but he
I haven't.
says that he's the CEO of First Majestic, and he's saying right now that he's getting silver and gold up from the ground. He's getting roughly 8 ounces of silver for every ounce of gold. So you can see here the alignment in this Fib extension is actually very thrilling for me to see you have this perfect alignment all the way down. So potentially, again, not tomorrow, not next year, when this bull market in gold and silver is going exponential, you could actually see a sub 10 to 1 ratio in gold to silver. Maybe only for like within intraday, but that is definitely in the cards.
Yeah. So you're currently at a value of 82 at this present moment. If you
Yeah,
retrace down to the 1.6 level, that would take you to what? 30? Yeah,
30.
so
Yeah,
30. So I mean that would be an overperformance of silver by close to, 2.5x the
yeah,
price of
roughly.
gold,
Yeah,
assuming the price of gold stays constant. right? So if it stays constant at this $2,400 level, the price of silver 2.5x's. But we all, there's a good chance that the price of gold keeps going up as well.
It will, yeah, it will, but with a lesser rate, but it will go up, yeah, for sure. So yeah,
Great.
but don't sit up overnight waiting for it. I mean, we're talking 10 years out maybe. Again, timing wise, insanely difficult, but we're talking years before that happens. So
Right. Yeah. So what do you see? Anything else you want to look at?
I just want to show you what we talked about here with a also a very, very important ratio. And in this case, we are measuring gold by inflation. And you can actually see here also this, if you look up on the gold chart, you will never be able to see this, but actually we are seeing a right now actually a 50-60 year breakout of gold in relation to inflation or CPI. And we all know that the CPI, I think you have to double that. The government gives out their monthly CPI numbers, but in the real CPI numbers is at least double of that. But that's a different topic. But according to their numbers, you can actually see here that gold is breaking out against inflation, meaning gold is outperforming. It's about to outperform inflation. And both you know and your viewers knows that inflation is here to stay. Um, I think over the next 5 to 10 years, inflation will be really high, but you will have gold actually outperform that high inflation. So that just speaks some value into that gold is finally, again, after 50 years. You could argue that, of course, gold here was also an inflation hedge, but finally, gold will be that major inflation hedge that you really need in your portfolio to at least come out, even footed in 10 years time. But also, gold will and should also outperform that and actually gain value in purchasing power terms compared to the dollar. So that is
Let's look at gold versus the S&P. I see you've got that there.
yeah, sure. Where is it? There, the SPX. So here we have again, this is long time frame. We're talking more than 100 years actually. Let's remove that. Um, so you can see here for 100 years time, you can actually see this broadening formation where we are touching the lower and the upper trend line there, not to perfection, but again within what you would consider a perfect touch. And ever since the 2000s, where we had the dot-com bubble, we have rallied, and where we are now is, if we take a trend line there onto here, you can also see that we are about and have tried to for a long time to break out against the SPX or the SP 500. And also many people are talking about the 0.5 ratio is the ratio level to get above. And at that point in time, you will have gold also outperform the big broad index, in this case, the SP 500, meaning that also money should start to rotate because it is a better value proposition at that point in time to get into. So you can see, and you don't need much. You can see, let's say 5% from the or 10% from the SPX to go into gold. You will start to see gold do insanely well because gold is a very tiny market. I don't know the market cap for gold. I think it's like 10, 12 trillion, maybe a bit more. But compared to is it trillion? Yeah, it has to be trillions, right? I guess.
Yeah, it's it's
Yeah, it
it's
has.
somewhere around 10 trillion.
Yeah, exactly. But again, in the grand scheme of things, that is a tiny market. You actually have Nvidia being almost a quarter of that. That's quite impressive, by the way. So look for that 0.5 ratio level to break against the SPX, and gold will also start to do really well on that front. And I think it's probably the last check mark we have for gold that is breaking here the SPX ratio. And then we should again see wonders within gold. Therefore, also silver, because silver, as we have just looked at, will do better. So that's good.
Great. Let's go ahead and pivot over to the price of oil. I know we're trying to keep this gold centric, but obviously the price of oil has ramifications for
Yeah,
gold mining,
yeah.
right? Input costs are dependent upon the price of oil. So, what are you seeing by way of the price of oil?
I see, but I agree. Yeah, oil and excuse me, energy and precious metals are very much related to each other because higher energy prices, higher inflation, and that's when usually you also see metals, gold and silver do somewhat well. So they are, as you mentioned, and I agree, they are related to each other. If we go back here, we can see the peak there in '08, and ever since we actually had a beautiful, if you can call it that, three major impulses, lower lows here in oil. And this, of course, was a huge spill due to the March 2020, where oil went negative by, I think, $40 or 45. And then we had a huge snapback all the way back to the upper, breaking out. And now we are retesting and actually consolidating big time here for oil. If we zoom into the daily chart, it's actually coming to a point, and now we see a lot more stuff going on here. And I want to highlight this big triangle. I want to make it really, really thick here so you can see this blue triangle will actually decide, in my opinion, the oil price for the next few years. You can see we have a perfect 1 to 5 wave here, and now we're hopefully, depending on which investment you have, if you don't have any, you want the oil price to go down. But again, it seems like oil wants to break out at this point in time here. It's really trying to get above that 84.5 dollar level. If it does on a weekly basis, I think that's the start of on oil going higher. If we start, the other side is that if we start to not break out, potentially we have a false breakout and we start to come down hard, that is your recession heavily in motion right there. So oil is one you should look at on a weekly basis, in my opinion, to see where we're going. I do have a bias to the upside. But again, if the economy, which is really, running uh, really poorly on a lot of cylinders, if that starts to weigh into the markets, I think oil again should get dragged down with that event.
Gotcha. Well, Casper, one thing I've been doing in this on this show is asking each guest to give out a book recommendation or two, uh, so that the audience can, educate themselves on. So I'm going to ask you the question: are there any books that you would recommend the audience look into that have helped you?
Personally, I have read a few books. Yes, in my early days, I have. I cannot remember the names of them, but I read some books on Fibonacci levels. Even though I don't use Fibonacci's as much in my way of doing things, I did read a few books on Fibonacci's. Again, I cannot remember the names. Maybe I can give them to you, and you can post them in the description below.
Sure.
And then just basic candlestick books, just to have an idea about what candlesticks, how they look, and what formations are the most common. Just the very basic, candlestick formations and what they mean, price targets, and all that. But most of how I actually started to do this is just by self-learning, I guess, and follow people on YouTube, see what they do, and also follow some people on Twitter just to see how they operate, and then try to find your own way of looking at charts. Because if you fully copy a guy, um, I guess you don't know when you don't really exactly know when to get out, when to take profit. So you have to find your own way. But it is a good thing to take a little bit of each person that you think this guy, what he's doing here makes sense. I will incorporate that into the way I'm doing it. So I have just charted tons of charts and trying to improve, every single week.
Great. So whenever you send me
So
those books, Casper, I'll post them down in the link below. I may actually have them posted right now. So be sure to check the link below, guys, the description below for the links to those books.
cool.
My next question to you, Casper, is so I've also been asking my guests to ask a question to the next guest. So in this case, it is Kevin Wadsworth from North Star Bat Charts.
Yeah, cool,
I
cool.
think you know him. So
Yeah.
if you could ask him a question, what would it be?
I think with today's event, I think I would love to hear his take on uranium, on a broad picture. Where are we? Because we've been in a big choppy market for the basically for the entire 2024. So I would love to get his view. Are we finally about to break that? I think it's 31.5. We have a big resistance there on the URA, or is this it for uranium? That is
Okay.
my question to him.
And my question for you is from Andy Scheckman, and
I'd
he
like
wants to
know what they think, what where they think we are in the cycle. Where are we going? What do they think of the BRICS? What do they think about what's happening inside this country? Is it planned?
Again, this maybe it's not to be too conspiratorial here, but I think it fits well into the to this 100-year cycle. If you look back into what happened there in 1920, you had a pandemic. You had the World War One. And then you had a major crash later on. So I think we are, at that point in time. Also, given the fact that I think we had this major bond market, bull market from 1980 until March 2020. So that entire um, monetary system we had for like 40, 50 years has come to an end, and we need some sort of new implementation. Um, and in order to have that new system in place, you need to slowly actually kill the other without people getting too scared. So when the system starts to crack, which it is doing now, at some point in time, you will be ready to offer the people the solution which you already had in place, like 5, 10 years ago, ready to say, here it is, here is your savior, and actually it will just be a new version with a lot more surveillance, a lot more control, and it will be the CBDC which will come. Many people I hear say, "What does it matter that the government can see what I'm spending my money on and all that good stuff?" But actually, it will be like a digital prison for the next many, 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 many decades to come, and it's something that people should be resisting and fighting for a lot more than we see today.
All right. Well, we'll leave it on that note, Casper.
But
Check
again,
out
that's
buy your
a
gold,
that
guys. I'm just
yeah,
kidding.
exactly. Buy your gold. But again, that topic is I mean, we could talk about that for 1 hour also. It's a total different topic, but I think very important. But that's just my very brief, quick resume of what I think where we are. So I agree. Gold, I think, is you don't need a lot of gold, but a little gold will go a long way in this environment. So yeah.
100%. Well, thank you so much for coming on, Casper. Where can people find you? Tell us about your Substack and any concluding thoughts before we wrap up.
Yeah, thank you for asking. Yes, I have my Twitter, I have my YouTube, and in the past 4 months, I have started up this Substack again, where I do daily videos of how I see things are going. That is within gold and silver, oil, platinum, also a little bit of crypto here and there. We do that also. But yeah, we're just trying to navigate what I think is the commodity bull market, and hopefully I will play it as good as I can and make the most of it, because I think this is an opportunity that you don't get very often within gold and silver. Also in uranium, I still have beliefs in uranium, even though it looks a bit sketchy here short term. But yeah, Substack at Uselink INV, and that goes for Twitter and the YouTube as well. Uselink INV. That's where people can find me if they want to see more.
Okay, we'll have the links to those down below. Be sure to check it out, guys. And with that said, I'd have to remind you, like the video if you enjoy this content. Subscribe to the channel if you haven't already, so we can get more guests like Uselink. And write go Casper go, or go Uselink go, whatever you prefer, in the comments down below. Go Casper go. Go Uselink go. In the comments down below. All right, guys. I'll see you in the next episode. Bye, y'all.
Bye, guys.